Tax code was created to benefit entrepreneurs and investors. But why would the school system put tax saving strategies in their education when taxes pay for the education system? If you have a dedicated place in your home where you solely work, you can write off that portion as a home office. Using your personal vehicle for business, 75% of the interest on your car note, car insurance, parking, gas, repairs, you're able to write off on your taxes. If you travel somewhere for 5 days, lunch, dinner, networking event. Flight is 100% tax deductible. Airbnb or hotel is tax deductible. 50% of your business meals is tax deductible. That can be an extra $10,000, $20,000 a year.
So Carter, welcome to the pod. Thanks for coming.
Happy to be
Let's
here.
start. So anyone listening who's not familiar with you, what is it you do, and like how did you get into that?
So I teach entrepreneurs how to live tax-free.
Okay.
Simple as that. I got into it because my mentor told me if you want to make a lot of money, solve one or two problems. Help people either make money from their money with investing, or help people keep their money away from the IRS. Those are two problems that only wealthy people have. If you solve wealthy problems, you'll become wealthy.
I'd even say, and I'd say like it's even probably stronger from the sense it's like fear-based. Like they have a lot of fear around it, so it's like even more enticing.
It's a pain point. So like when you lead somebody towards pleasure, that's one thing.
Okay.
But you lead somebody away from pain, that's a more intense thing. So
and you only work with high-income earners right now, right?
I want to talk about this because I don't want anybody thinking like, oh, well, like where's the CPAs for people that don't have a lot of income? Well, here's the problem with that thought process. You don't have a tax problem until you solve the money problem. Mm-hmm. If you haven't solved the money problem yet, you don't need a tax strategist.
Correct.
You need to solve the income problem. Once you solve the income problem, then you actually have a tax problem. So when people come to me that's making like $100,000 or less, and when I say that, I don't mean anything. I don't mean to downplay $100,000, but like you don't have a big tax bill yet. You're probably paying $15,000, $20,000, give or take. Yeah. But like you haven't really solved the income problem yet. So like focus on making more money, and then that's when taxes become a big thing.
Yeah. So what would you say to those individuals who are not high income earners yet? Like if you get someone who approaches you and they're not a high income earner yet, like what advice would you have for them, or where do you send them? From
a tax saving standpoint, like I just tell them to do the minimum research that you need to do to learn how to take advantage of the tax code, right? Mm-hmm. The tax code was created to benefit entrepreneurs and investors, not W-2 employees.
Yeah, 100%.
Right? So if you're only making $100,000, the first thing I would say is, all right, instead of making $100,000 at work, can we find a way to make this $100,000 in a business or a 1099 contractor, or some way where you can have more control of your tax situation? So one thing I advise people on is, depending on what industry you work in, your employer might be willing to pay you as a 1099 contractor versus a W-2 employee, right? This is big in tech and other fields of that nature, because the employer actually saves money paying you as a contractor versus an employee. They save about 7.6% in self-employment tax. So they actually save money paying you as a contractor. So I say, if you can get your employer, you can convince your employer to pay you as a 1099 contractor, now you're essentially a business owner. And now you can start taking advantage of how the tax code works.
How did you get into learning about the tax code? Because I mean, the tax code gets bigger and bigger and bigger. And I mean, it's hundreds of pages.
Yeah, 80,000.
And also like there's a lot of strategies, and most people, I would say, they don't know if it's legit. Like there's so much stuff you hear and it's like, oh, that sounds good, but you don't know. So I'm curious on, how did you learn about it? Or how would you advise someone to go learning about it, like in the most correct way possible? And then what's the main strategy you do? Because there's got to be a lot of strategies, but like even the stuff I do, if someone's like, hey, what's the main strategies you do? I'm like, okay, I got like this one and whatever.
Right.
Like, so I'm kind of curious on that.
I learned about it because I have an undergraduate and master's degree in accounting. So I went the whole traditional education route. But the school system teaches you how to be an accountant. They don't teach you how to do tax strategy.
Right. Okay.
You know what I'm saying?
So you're like a CPA.
Yes, I'm a CPA, but like let me just be very clear.
CPAs, I don't get tax strategy from.
Let me be very, very clear. Like a CPA is the amazing designation to have, right? It's like the highest viewed designation in America for accountants. But that being a CPA does not mean you learn tax strategy. I'll take it a step further. When I got my CPA license, I knew barely any tax strategy. I knew how to be a Big Four public accountant, but I didn't know tax strategy. So I had to outside of school, I had to do my own learning. I had to pay for other education courses, conferences to learn how to do tax strategy.
You went to school for accounting and then you took it further.
Yeah. Because it was like, okay, I'm a CPA, and I worked
That's
in
really cool.
I worked at Big Four accounting.
Good for you.
I was like, this sucks. And then I was like, I worked 80 hours. Like, this is awful. And then I started my own business. I was like, oh, all right, what is business owners' main pain point? Is it, doing their bookkeeping or whatever? But like the business owner's main pain point is an unexpected tax bill.
Oh yeah, 100%.
You know what I'm saying?
And like I'm curious because you actually learned like CPA stuff at school. Like what? I guess I'm curious. Why do CPAs not really know taxes that well? And I want maybe it's not even that, but I guess they're so close to the line, right? Like what I've seen with tax strategists is like you have a guy who's either really close to the line or they get farther away, and you have to kind of decide where do you want to lie in that strategy, and then obviously finding a CPA or accountant who will implement it, because even if the CPA doesn't come up with it, they still have to be comfortable to sign off on it. So is there a reason why CPAs don't learn a lot of tax strategy, or is it just like that person in particular? Or
yeah, CPAs make bad tax strategists, similar like how college educated people make bad entrepreneurs.
Okay.
Right?
Okay.
You have to do a lot of unlearning.
Got it. Okay.
In order to relearn, right? Okay. Like, because the school doesn't teach you how to be a by the book accountant.
Right.
And you got to think, why would the school, this is a very good, analogy to think about. Why would the school system put tax saving strategies in their education when taxes pay for the education system?
Yeah, no, 100%.
Right.
No, they
so
wouldn't.
Even being a CPA, they're like, okay, you're going to learn how to audit books of corporate companies. You're going to learn how to review finances, profit and loss statements. You're going to learn a little bit about taxes, just enough to be dangerous, but and that's it. They don't go anything. They don't go any lines outside of, I guess they don't do any gray line stuff. It's like, hey, this is the strategy that you should employ, nothing else. So CPAs make bad tax strategies because they're by the book, and they think that after the college education, they no longer have to learn, right? And I think that's the biggest misconception about being a CPA. Like once you pass that test, that is the beginning of your learning, not the end of your learning. So I actually learned more in books and from mentors than I ever learned about school. And when it comes to taxes and just obviously anything else.
When it comes to most tax strategists, obviously that's not the case for you, but I'm curious, like most tax strategists, what's their background? So the guys who are actually coming up with the plans for people to save money on taxes, are they usually CPAs and accountants, or are they just like, they're completely have no background in that and they're just completely...
Yeah, so that some of the better tax strategists I know are actually enrolled agents. Right. So enrolled agents is like another tax designation that you can get without any prior education. You have to study for the tax code and things like that. And you have to get your enrolled agent license. But like the reason I think that they usually are better strategists than most CPAs is because they don't have that 5 years of strict between the lines education that makes you not think outside of the box, right? So I just happen to be a rare breed because I have the school education, but I didn't let the school education stop me from being creative in the tax strategy that I employ with my clients.
Interesting. Okay, and then what would you say is the main tax strategies you would give someone? It's like on average, like do you have particular ones that you usually try to teach people about or you try to implement for your clients?
Yeah, so I think there's 3 levels to tax strategies, right? And we can dive deep on each level if you want. So level 1 is income reduction strategies.
Okay.
This is how do I spend money and make these expenses tax deductible expenses, like, or how do I turn my personal expenses into tax deductible business expenses? So we're going to spend money to reduce our income because I lower our taxable income, the lower our tax bill. So that's like level 1, right? Level 2 is income shifting strategies. How do I shift income off of my tax return and put it somewhere else, right? And there's some strategies on how to do that, like paying your children's private family foundations, management companies. That's level 2. Then level 3 is paper loss strategies. How do I make investments that make me money in my bank account, but lose me money on my tax returns via depreciation? And most of that is centered around real estate. So there's level 1, level 2, and level 3. And the way that we disseminate it to our clients is if you're making less than, $200,000, you're probably mostly focused on level 1 strategies. How do we spend money to reduce taxes?
Right, of course.
Right. When you're making $200,000 to $1 million, income shifting strategy. So we put level 1 and we also add level 2. How do we reduce our income, but also how do we shift income off of our tax return and put it somewhere else? Then when you're making $1 million plus, we have to bring all 3 together. We have to do income reduction strategies, we have to do income shifting strategies, and we have to do paper loss strategies by finding investments that's going to make us money in our bank account but lose money in our tax return. And each of those silos have about 10 to 20 different strategies in there.
Okay.
But I can give you like the top 2 in each.
Yeah, do that. Like,
Okay.
do that, yeah.
Okay, yeah. So income reduction strategies.
Because the very bare minimum, it like helps the listeners, I think, at least know what to look for, or if they haven't heard it from someone, then they can start to investigate or reach out to you, etc.
Yeah, and I like it because I always harp on this. Let's not get too cute too fast.
Yeah.
Right? Like don't try to do the whole, I'm gonna get a private family foundation and manage it and put the money over here. If you only making $100 grand, like it's gonna cost you more to set up the plan than it will in saving on taxes. So I love breaking it down like this. So income reduction strategies, right? All right. The simplest way I could put this is number 1, how do we turn a lot of your personal expenses into tax deductible business expenses? Because I don't want you spending any extra money if you don't have to. How can I turn money you're already spending, get it off of as a personal expense, and move it over to a business expense? So a few examples is like, all right, your apartment, right? You know, we're in this apartment right now, and if you have a dedicated place in your home where you work, which most people do because of COVID after 2020.
Right.
If you have a dedicated place in your home where you solely work, cool. The IRS says you can write off that portion as a home office.
Yeah.
So if you have a home office, let's say your home office represents 20% of your home.
What's usually the percentage you can't go above? Because I think it's usually, I'll tell people like, don't go above 20%. Like if you say you use more than 20% of your house as an office, that's where it kind of gets dicey.
So it depends. I wouldn't say it's a percentage, it's a scenario thing. So we have a client that has a house. So it's a 3-bedroom house.
Okay.
Him and the spouse live in 1 bedroom. The other bedroom is his office. The other bedroom is the spouse's office. And then the basement is their content studio.
Oh, so it's like 75%.
Yeah, so they got 2 bedrooms and a basement because they're the content creators. Then they have a basement where they decked out the whole thing for their content. So they're at like around 50%.
Okay.
But it's legit.
Yeah.
Like those other rooms are only used for business.
Yeah.
And they're...
Do you feel like that increases your chance of an audit though? Like when they see higher numbers, it's just the chance the IRS looks into it closer.
Audits are nothing to be scared about if you're taking care of the things you're supposed to be taking care of. Right. So I compare audits to going to the dentist.
Yeah.
If you go to the dentist and you haven't been brushing your teeth, haven't been
you're
flossing, you're gonna you're gonna have a bad time, right?
Yeah.
But if you go into the dentist and you've been brushing, flossing, not eating sugar, it's gonna be in and out in 15 minutes. So don't be scared of audits if you track what you're supposed to be tracking. So this client particularly had 50% of their home 50% of their home was a deduction. Was business use, and their living expenses altogether was like $5,000 a month. It's a big house, right? Wow. So they were able to write off $2,500 times 12. That's about $30,000.
Yeah, that's a good amount,
right? It's $30,000 write off for using their home as part of their business, right? Yeah. And it was legit because we did the documentation. They didn't get audited. They were fine.
Oh wow.
So that's number 1. Like, because I'm trying to see what's the biggest expenses you're already paying for that we can turn the tax.
Of course.
So home office, and then I would say second. Obviously, it's vehicles, right? Mm-hmm. If you using your personal vehicle for business, you could write off the percentage that you use for business. And this, I wouldn't say don't go over 75%. If you have 1 car, like don't try to say that you use that car 100% for business use, because you go to the grocery store, you go pick up the kids from school and all that stuff. So if you have 1 vehicle, we can say 75% is business, 25% is personal, and you get to write off 75% of all the interest on your car note, the car insurance, parking, gas, repairs, maintenance, oil changes, all the expenses associated with the vehicle, you're able to write off on your taxes. So your home, if we can get your home to be a business expense and part of your vehicle to be a business expense, those are like 2 big expenses that we can shift from your personal to business to help reduce your taxable income.
Okay, wow, interesting. And then that's just phase 1. What's like phase 2?
Yeah, so
that's phase 1, right?
Yeah, so phase 1, that's income reduction strategy. And there's more there, like travel, right? Like, and before I go into 2, I'll give you this one more for travel.
Okay.
A lot of people spend a lot of money traveling. I know.
Yeah, I do.
I was about to say,
I spend a ton, bro.
Yeah, I spend a ton of money for traveling, right? So it's like, all right, if I'm spending, $50,000 to $100,000 traveling, how do I turn these personal trips into tax deductible business trips? Yeah. And the easiest way to do that is the IRS says if you find business activity in that location, that personal trip is now a tax deductible business trip. So 3 ways to find business activity in any location you're going to. So I'm in Miami right now. Doing a podcast.
Yeah.
This is now business activity, right?
Perfect.
Right. Easy. Documentable too, right? Like I got the date. Like, you know what I'm saying?
Yeah, we know the podcast motives.
Yeah. So documented proof, tax deductible,
bro.
right?
Yeah, that's awesome.
Yeah, so that's number one. Podcast or networking events, right? So you can go to eventbrite.com. You know Eventbrite. Like, dude, they have hundreds of networking events in every country, every city, every day. Yeah. Go to that network event, buy a ticket, $50, go in there, shake hands, kiss babies. Yeah. Like get your badge, boom, take a picture of that, upload it to QuickBooks, business activity, right? You gotta do one of these a day. And then the third thing is like finding a client or entrepreneur friend, just take them out to lunch, man. Talk about business, right? Yeah. Document it on the receipt.
So it doesn't even have to be every single activity. It just has to be a activity.
A activity per day.
Okay.
And I would say 1 hour for the activity, right? Maybe 15 minutes, right? But like that's easy. So if you travel somewhere for 5 days, lunch, dinner, networking event, lunch, dinner, I'm done. Right? Yeah. Every day was now business. Yeah. And so now the trip to Dubai, the trip to Miami, all these things, the flight is 100% tax deductible, first class, middle class, whatever you fly. The Airbnb or hotel is tax deductible, and 50% of your business meals is tax deductible. Wow. That can be an extra
and that, $20,000. That does make a big difference because trust me, especially with travel, like it adds up quick. Like I think next week, me and a couple of my team members are going to ClickFunnels event. It's like 15. We're already 15 G's in.
Yes. Yeah, at least. You haven't even got there yet. Yeah, like, you know what I'm saying? Like, you haven't even got there yet. So that's, I would say those 3 strategies, income reduction strategy, if you employ those 3, that'll save you a lot of money on taxes. Okay. Now, income shifting strategies where things a little bit more complicated, a little bit more advanced, but can save you big.
Right.
On
These
taxes.
are usually for people making at least $200,000.
$200,000 to $1 million, right? So the first strategy is paying your children, right?
Right.
So if you have kids, you can hire your kids into your business, have them do admin tasks, shred paper, social media, whatever. And the IRS allows you to pay them up to whatever the standard deduction is, and that income will not be taxable. So in 2025, the standard deduction is $15,000. So if you have 2 kids, you can pay each kid $15,000 a year for the work they did in your business. As a business owner, any money you pay any type of employee or contractor is tax deductible to you, obviously. But the dope part about this strategy is that the kids don't have to pay taxes on this money because their standard deduction is going to wipe out that income from being taxable. So they don't have to pay any federal tax, any state tax, any self-employment tax, any FUTA, SUTA tax, so like completely tax-free.
So everybody's tax-free.
So all the money that you pay them is tax-free. So if you think about it, if you're in a 37% tax bracket, that $30,000 would have been taxed at 37%. That's like over $9,000. Yeah. So you move $30,000 from a 37% tax bracket to a 0% tax bracket. So you shifted $30,000 from your tax return and shifted it to your kids' tax return, which is a 0% tax.
Love it.
Right? So you just saved yourself $10,000 in taxes. And like you have to spend the money on your kids anyway.
Right.
So why not, like, instead of making money paying taxes and buying stuff for your kids, make money, pay your kids.
I feel it's a good way too. Like if you actually want to teach them about entrepreneurship, or like you want to pay them for chores, or like that's the way you actually could
That's the way you do it.
Yeah, 100%.
Don't make money, pay taxes, and pay them. Yeah. Make money, pay them, and then avoid taxes on the money you pay them.
100%.
Right?
I like it.
So that's number 1. Number 2 is a really fun strategy. I'm trying to think if I can explain it to you in a short time period, because I think this is something you could really take advantage of. Yeah. So if you are a service-based business owner or a digital product business owner, as you are, like, we have extremely high margins in our business because, like, it's just
there's just not a lot of cost of this.
It's not a lot of cost of goods sold because the goods is on the computer, right? Yeah. It's digital. So we have a lot of clients we work with that might make $800,000, and then after all the write-offs we can find, they're still sitting at $500,000 net. So that's a big problem. And so towards the end of the year, we're staring at this $500,000 net income and being like, what can we do? Like we bought the car, we did all the income reduction strategies. We can't spend any more money. That would be irresponsible, right? So how do we shift some of this income from our LLC or S corporation? How do we shift it somewhere else? So we don't have to pay taxes on it right now. So this strategy is called a fiscal year management company, right? So a fiscal year C corp. So you can either hire like HR, which is a management function of your business. Sure. You can hire HR into your business, or you can hire an HR company to handle your HR, right? So there's these different functions of your business that you can bring in house, or you can hire a company to handle it, right? So if that is true, which it is, couldn't we set up another company to manage a service of our business?
Yeah.
Right?
So is it kind of like a holding company a little bit?
A little bit.
Kind of. Okay.
Yeah, but you'll get it by the time I'm done explaining. Okay. That you're not far off. So just like we can hire HR or hire advertising or whatever, we can set up our own company to handle that for us.
Right.
And with C corporations, a C corporation can have a calendar year end, which is December 31st. Right, like the regular year end, or it could have a fiscal year end, which means that you kind of get to pick when the calendar year ends for the C corporation. So, if in November of a calendar year we set up a C corporation, we can say the C corporations that we set up November 1st of 2025. This corporation, the calendar year is not going to end in December 31st, because that will only be 2 months from now. The calendar year is going to end in October of next year, right? So the C corporation was born on November 1st of 2025, and the year ends October 1st, 2026, right? So if we have our regular LLC that's going to end in December 31st, couldn't we set up a C corporation to handle the advertising for our company?
Yeah. Okay.
And couldn't we push or pay that company $400,000 to manage our advertising?
Yeah. I mean, I guess, $400,000. That's a good amount of money. Yeah.
Yeah, $400,000 to manage. Okay, we're going to pay you $400,000 to manage our ads, and this $400,000 includes the ad budget that you're going to be managing.
Okay.
So now, if we have let's say our LLC has $500,000 net income. If we set up this C corp with a different year end, and we say you're going to handle our advertising, and we push $400,000 into this company to handle our advertising, now we just took our net income from $500,000 down to $100,000.
You make this kind of holding company, you put money into it, but ultimately, like, you're still the owner. So how exactly are you able to write that off if you're still technically the owner of the holding company? Does that make sense?
Yeah. So it's not like a related. It's not essentially a arm's length transaction. Okay. You have another company that has another function of your business.
So understood.
Right?
Okay,
you know what I'm saying? So like this,
that's
I'm setting up
what it does.
Yeah, I'm setting up this company to handle advertising.
Got it.
Right?
And that's the fee they charge.
And that's the fee they charge, and that's going to be their budget for managing our ads. So now we're looking at the end of the year. We have this $500,000 net income. We don't want to just spend $500,000 because just irresponsibly. So we're going to pay this company $400,000 to manage our advertising, and now it buys us another 10 or 11 months to spend that money.
Right.
Because if we spend that $400,000 before the fiscal year end of the C corporation, it's a write-off anyway.
Right.
So it's not a tax deduction strategy, it's a tax delay strategy. Because you're going to spend the $400,000 on ads next year anyway.
Yeah.
But now you have this company that's going to do it on your behalf, and we're able to get that net income, get that write-off this year versus like waiting to.
Got it. Okay.
You know what I'm saying?
Makes sense. Yeah, that makes sense. Okay.
So this is a strategy we use with a lot of our clients in the digital space. We know they're going to spend $500,000 on advertising, so we just set up this company, put the money over there, and as long as they spend it before the year end, we can do this every single year. At the end of every year, how much money do we have left? Okay, we're pushing that to the management company because we just got to spend the money next year. Mm-hmm. So it allows us to get money off our books right now, put it somewhere else until we're ready to spend it. Okay. That's like probably one of our better strategies at level 2 of income shifting. Then the level 3 is paper law strategies with using real estate, right? So real estate is the most tax advantaged asset that exists on earth, right? Mm-hmm. Because with real estate, you can earn money in your bank account, but you can lose money on your tax return.
Right.
That's what Donald Trump had, a $700 tax bill with hundreds of millions of dollars in income, right? So with real estate, you are able to, I was giving an example. Let's say you purchase a real estate property, it costs $500,000, right? That real estate property is probably going to, after expenses, probably going to net you about $1,500 a month after expenses and all that stuff. So you probably bring home $18,000 a year, right? But the IRS says you get to take a deduction called depreciation, which to quantify how much your depreciation is on a residential property, you take the property, the value of the property minus the land and divide it by 27 and a half. 500,000 divided by 27 and a half is about $18,200. So you made $18,000 in profit, but you got an $18,000 deduction for depreciation. So $18,000 hits your bank account, but you also have this $18,000 depreciation that wipes out that income on your tax return. So that $18,000 you're going to make is essentially tax free.
Got it.
Right. So we can keep doing this. We keep buying more real estate.
Do you know why the number is 27 and a half?
I don't know why. It's 20. Well, so every piece of equipment has a useful life. So the camera, the useful life is about 5 years. The ceiling, a useful life is about 15 years. Flooring, useful life. So they base the number off the useful life of that asset. So they're saying that 27 and a half years, that building might be like, if you don't take care of it, like it might be shit. You know what I'm saying? So, so that's why it's 27 and a half. But what's interesting about real estate is instead of waiting that 27 and a half years to get all of our depreciation, we can accelerate that depreciation via something called a cost segregation study. I'm pretty sure you heard of that term. So with the cost seg study, it essentially allows you to, instead of saying, hey, I get to take my depreciation over 27 and a half years, I get to accelerate a lot of that depreciation into the first year. So in this example of a $500,000 real estate property, instead of getting that $18,000 per year tax deduction, with a cost seg study, we can write off up to 30% of the value of the property in the first year we acquire it, right? So if you have a $500,000 property, 30%, that's an $150,000 tax deduction.
Right. Can you use that against your other taxable income as well? Okay.
And that's where it gets tricky. So you can use it against your other income up to $25,000 a year. So if you have $150,000 tax deduction, you can use $25,000 against other income, but the other $125,000 you can't use. Okay. Unless, because there's always an unless. Right. There's always an unless. Unless you or your spouse get something called real estate professional status. All real estate professional status means is that if you get real estate professional status, there is no limit on that deduction that you can take. So if you or your spouse get real estate professional status, there's no $25,000 cap. You get to take all $150,000 of that deduction against any other income, whether it's W-2 income or whether it's business income. The problem is you can't have real estate professional status if you have any other employment, because you have to get real estate professional status. You have to have 750 hours of dedicated to real estate solely, and you have to spend more time on real estate than anything else. So if you're a full-time business owner, you don't have the time for that because you're operating a business. But if your spouse is a stay-at-home spouse, you could turn your stay-at-home spouse into a stay-at-home real estate professional. All they have to do is spend 15 hours a week.
Right. Oh, that's right. That's right. Yeah, I totally forgot about that.
Yeah, researching real estate, looking for properties, managing your properties. And so if your spouse is a stay-at-home spouse, they can find 15 hours a week to do some real estate work or manage your real estate portfolio.
Forgot about that rule.
Yeah. So like when I get married, my wife's not going to have a job. Her job is going to be a real estate professional status. Like, that's what I need. Because the money you can save us in taxes is more than any money you can make for us as a couple. Yeah. Right. So now we can buy these properties, do cost seg on $1 million property. That's a $300,000 deduction. Yeah. You buy one of those a year or two of those a year, $600,000 gone.
I totally forgot about that rule.
Yeah.
That's so helpful.
Yeah.
Okay. And that's phase 3.
Those are phase 3. And again, there's multiple strategies in each layer, but I want to give like the easiest to understand.
And those are good strategies. I would say just for the listeners, like out of all this stuff, I've heard way crazier stuff. I mean, none of that stuff is very crazy. I actually think that's pretty
Legit.
good advice.
Yeah,
It's legit.
yeah.
Like I've heard way crazier stuff. I kind of wanted to see like,
Yeah.
you know, how crazy were we gonna get?
Yeah.
So,
And you can, and at some point, if you want to ask me some of the crazy stuff and get like my opinion on
Yeah.
it, I'll be down for that.
yeah, because there's definitely far more stuff you can get into.
Yeah.
Okay, so a little bit of what we like to talk about in the Infinite Income podcast as well is what does your sales process look like? So for you, is it mostly meaning word of mouth referrals? Do you run ads? Do you do shout outs? Like how do you get most of your clients?
We get more clients in a month than most advisory firms get in a year.
Wow.
So we onboard, I would say about 150 to 200 clients every 2 months.
That's a lot. Dude.
Yeah. So about 75 clients a month.
That's a lot.
I know. Yeah. So the way that we acquire clients is, I'm pretty sure you heard of the 5-day challenge model.
Yeah.
Yeah. So we spend money on advertising. And I have about 1 million followers on Instagram too. So we use my platform. Yeah, that helps. That helps. Yeah. So we use my platform and then we run ads to a free workshop because you cannot hire me if you're not educated. Like, because uneducated clients are the worst clients in every field.
They're the worst.
Right? So you have to come to this hour and 90-minute workshop so I can teach you about taxes. Right? And then after you come to this workshop, you can purchase a ticket to our virtual 5-day conference. Right? And during these 5-day conference, I'm going to be breaking down all of the strategies that we just talked about to hear in detail. So one day is going to be on one, another day is going to be on one. And so clients have to pay us about $397 to be a part of this 5-day training. Again, I want you to be educated because I don't want you to be asking all the questions about what is this deduction or why, like you're getting worried if you're going to get audited. I want to give you insight on this strategy. And then after these 5 days, you are then able to hire us if you qualify.
Interesting.
So on day 3, we make them fill out an application. If you don't make over a certain amount of money and you don't have a business, we don't even let you hear about the opportunity because it'd be a waste of both of our time. Right. So then towards the end of the 5 days, we give the opportunity to work with us. And then about 150 to 200 people take advantage of that.
Do you do that challenge every single month or is
every
it like,
other month? Every other month.
So every month. Yeah, because I actually talked to someone yesterday and they had a great model. They were talking, hey, I do a challenge. I don't know if it's 5 days or not, but they don't do it. They do it every quarter. And I was like, bro, like you got to figure out a way to like speed up the amount you're doing because like the more challenges you do, the more money you're going to make. So it's super interesting. And then I'm assuming like all your emails and automations are all set up for like, hey, show up at this time at this place, like this Zoom link, etc.
Yeah, super dial. Like super dial from the moment you register to the webinar to the moment you get into the challenge. We have a 95% show up rate to our challenge.
That's crazy. Because 30, just so everyone knows, 30% is average.
Yeah. Well, so it's because they pay. People pay.
Got it.
They pay attention.
So it's like $97 to get into the challenge.
$397.
$390. Wow.
The more they pay, the more they pay attention.
So do you do a free webinar that actually pitches that, or like is it a sales page?
Yeah. So the 90 minute. So it's ads to 90-minute webinar.
And then you do that and you pitch the paid
the challenge, the paid challenge. And then the paid challenge to the high tech.
So I'm curious, just what got you into that? Like, why that strategy versus other stuff? Or did you try other stuff and it didn't work in that?
Yeah. So, dude, like we tried the VSL model, tried a lot of other models, direct to sales page, because the model that you choose for your business depends on the business owner. Mm-hmm. I'm a firm believer in that.
No, I agree. Yeah, like it's a little bit of like, what type of lifestyle do you want to live?
Yeah, exactly. What type of lifestyle do you want to live? Number one, and what are you good at?
Yeah.
Because I'm really good at presenting.
Okay.
I'm really good at teaching. Like I don't think there's anybody in tax space that make taxes as fun or appealing as I can.
Got it.
Right?
No, I agree. I mean, it's usually a very boring space.
Yeah, and it's not.
I think like an old man.
And my competition is like, I'm not bragging on myself. Like the lay of the land is just awful, right? Like, you know what I'm saying? So I know that I'm really good at teaching and I'm really good at presenting and selling. So for this model, it works best for me because I get to teach the people the strategies from me, get them excited. And I feel like God gave me a gift to turn really complex strategies into easy, digestible strategies. And so I leverage that to get the people to know, like, and trust me over 5 days. Then by the time it comes time to hire us, they're ready to go. They're educated clients. They're good clients. They understand the strategies. Some of them are already implementing the strategies before they even come on the welcome call with our company because they learned some of the strategies in the 5 days.
Yeah, that's amazing.
So they come ready to go. And that way we're able to give them quick wins.
So the only other question I have is like the timing. So you do this challenge every other month. Mm-hmm. How often are you doing these free webinars where you're selling them into the challenge and then is there a wait time? Meaning, let's say someone buys in January 16th and the challenge, you don't do it till February 25th. Like, do they wait through that whole time? And then you're constantly doing free webinars, getting more people. That's very interesting.
Yeah, so we do a free webinar every week live.
That's interesting. And that's where all the ads goes to the free web.
Yeah.
That's so interesting.
Yeah. And we can talk like numbers more probably offline.
Yeah.
But yeah, live webinar every week. And I love people like, you do a live webinar every week. I'm like, I love teaching.
And you have no issue with show ups with like cold traffic. Like, do you have pretty good show up rate?
25.
Yeah, 20. That's
average.
I mean, that's average. Yeah. That's interesting because it's like ultimately it comes down to what you like and what works. But yeah, I just, in my head, because I'm a very logical type guy and I always like look at numbers, I'm always thinking, like I look at that, I'm like, man, is that like a better strategy? Because if you're running ads once a week and you get enough people to show up and you usually presenting, like you do get more buy-in because people get to see you.
Yeah. And I'm like, and again, it goes back to lifestyle. If you don't want to see people, you hate teaching, you don't want to be on camera, you might need to do book call to VSL, to sales team, but now you have to manage the sales team. Can you manage the sales team? Or can you recruit a good
you don't
sales
have a sales
manager?
team then?
We have collection team.
Okay. So yeah, because
by the time I'm done, by the time I get done with that 5-day challenge,
that's interesting.
Did you enjoy it? What card do you want to use?
No, you're right, bro. Yeah. That's so interesting. Okay, cool. Well, that's a really cool concept. So, guys, I would say for anyone out there who wants to do a 5-day challenge, like anyone can. I don't want to say anyone can do it from that standpoint. What I mean is, like, if you're willing to set up the tech and automations, probably this is a good strategy, but you have to have a little bit of know-how or be willing to pay someone to like set up the tech and all that. Because if you run ads to a live webinar and they don't show up, like there's a problem, right? And you got to have some reminders.
Yeah, and I personally, this is my personal opinion, Tanner, you have to agree with me. I don't think there's a better client acquisition model.
There might not be. Like I hear you saying that, and I don't do it. But I'm, sometimes I'm thinking like usually when people are trying to get more sales, they have more of a connection. So like sometimes guys, I'll say, oh, this guy runs an event company basically because he does so many in-person events. But whenever me and my team do an in-person event, we make more sales.
Yeah.
So it would make like on paper, you might be right. Like I don't know because I haven't like myself, but you might be right because I'm thinking if you're seeing people that often and then they get on another one, like they're just very hot and they're warm and like they're getting to interact with you, ask you questions, you're answering it live, like. That's probably you're probably right.
I mean, so here's the thing.
And it's scalable because it's online.
It's like, you know what I'm saying? Like you don't have to, you're not asking people to buy a flight. You're not asking people to do any of this. Yeah. And here's how I try to explain it to people because I love doing challenges so much. I actually started another business where we'll implement the challenge structure into your business for you. Because people mess it up. And I'm like, they say challenges don't work. No, you did it wrong. Like, you did it very wrong.
And that's kind of what I said is like, you got to set it up right.
Yeah.
You got to set it up
right. We have another company where we come in and we set up your challenge for you, do the whole run through, train your team, do the first 2 with you. And then after that, you can do it on your own because that's how much I love it. But here's how I explain the challenges when I'm selling people on why they should do it. I believe that immersion creates conversion. The more time you can spend with somebody,
the more likely
they convert. Buy. So the reason webinars work and they have works as Russell Brunson built ClickFunnels is because you spend a certain amount of time with somebody, they will spend a certain amount of money with you. You spend 60 to 120 minutes with somebody, you can usually sell something between $9.97 and $29.97.
Right.
If you spend 2 hours a day with somebody for 5 days, that is 10 hours. And it's not just 10 hours, it's exponential. It's not linear growth, it's exponential growth in trust because the days stack on top of each other. So not like 2 hours here, it's 10 straight hours. So now,
and I forgot you do it for 5 days, bro. Yeah. So you're doing about, is it an hour per day?
2 hours per day.
And it's Monday through Friday?
Yeah, 1 hour live, 1 hour live.
Friday?
Yeah.
Wow, that's crazy, bro. And so like even like you're actually getting ready for your next like challenge. Well, wait, no, I take that back because because it's every month. I'm thinking the free web. So
every other month. And the reason that we can't do them every month because it would break the business because our back end.
And then you do group coaching on the back end, so that's why makes sense.
Well, it's actually we do the work for our clients. So we do their taxes, we do their tax plan, we do their investments, So the reason we can't do it every month, it would literally break. We can't hire fast enough.
Yeah.
We went to Axel Mosey's scalable training.
Right. Yeah.
He's like, the constraint is people. He's like, I love scaling ads. He's like, but you can't scale because you will break the business.
Yeah, of course.
Our constraint is people, right? So to make a long story short, spend 10 hours with these people. So just like you can sell somebody something for $1,000 to $3,000, you spend 90 minutes with them. We spend 10 hours with them. You can sell me anything from $15,000 to $50,000.
Got it. And that webinar you're doing, so you run ads to the free webinar. What day and time do you usually do it? And is there like a best time and a best day to do it?
It's know your clients.
Okay.
Our clients are entrepreneurs, so if we try to do something middle of the day, they probably have meetings with their team.
Can't show up.
Right. So we do it from 6 to 8 Eastern.
Okay. And obviously that's for the challenge days, but like, what about the free webinar?
Everything is 6 to 8.
That's interesting. Any specific for when you're doing the free webinar? You said you're doing it once a week, right? Because you're running ads. So is that usually like a Friday, or is that like?
So we did a lot of. I mean, you probably know webinars. Did you do the webinar model?
Yeah.
Okay, so we did a lot of research on webinars, and like we had a data team do like a probability of every day of people showing up, right?
Oh wow, interesting.
Yeah, because we spend a lot of money. It's like I'd rather pay you whatever to like give us the best analysis. So Sundays were had the highest show up rate because people are prepping for the week and they're like kind of thinking about work. Wednesdays are the second best because it's kind of middle of the week. People are like, you know what I'm saying? Yeah. And Thursdays are the third best because Monday and Tuesday people are fucking.
What was the first best day again?
Sunday.
Interesting.
Yeah.
Okay.
Believe it or not, I didn't like Sundays.
I wouldn't guess
me either. I don't like Sundays at all. Like,
and Tuesday I wouldn't guess the second best.
No. So Sunday's the first best. Wednesday's the second best. Because Monday and Tuesday people are dead from work.
Got it.
Right.
Okay, makes sense.
Wednesday they can breathe a little bit.
Okay.
And then Thursday is really good because of conversions because people get paid at midnight.
Interesting. The next thing I want to shift into a little bit is you obviously have a massive Instagram following. So is there anything you've done that maybe you could give to the listeners on, okay, big Instagram following. Is there anything you did to like amass it? Any tips you give, content strategy, stuff like that?
Post 3 times a day, every day for 3 years and watch what happens.
That's it, guys. Just 3 times a day for 3 years.
Yeah. People ask me what I did. I was like, I posted 3 times a day, every day for 3 years.
That's crazy.
And then there's currency in consistency, right? And if you think that's too much, I'm gonna give you an analogy my friend gave me. She said, Carter, you're a sports guy. I said, yeah. She said, okay, cool. You're busy. I said, yeah. She said, okay, so if it was the NBA playoffs and, you know, NBA finals, right? Mm-hmm. And you missed game 1 because you were working, mm-hmm. and you turn on ESPN the next day, they didn't have the replay. How would you feel? I'm like, very upset because I want to see the games. Okay, cool. What about game 2? You missed game 2, but then you turn on ESPN, it's like, see what happens, you know, see the summary. They didn't have it. Mm-hmm. She's like, how would you feel? Like, I would be very upset. She said, all right, what about game 3? You missed game 3. And you turn on ESPN, they don't have nothing about the game. I said, I'll fucking stop watching ESPN. Yeah. She said, exactly. Every day you don't show up for your followers, you lose their trust.
Yeah. I'll say this, and I don't claim to be a social media master, but I think the wisdom in what you're saying is it's like you just got to keep showing up too. And like you learn from it. So I think it's not just showing up, but like as you're showing up, you see what works and doesn't work. And the goal is to like double down on what works and then stop doing what doesn't. And a lot of times I think people don't do that. Like you'll either, one or two things will happen. It's like if you do it long enough, eventually if you're not getting results, you're going to quit, or you're going to see what's not working, what is working, and then you're going to do more of that and you will hit success. So I think the one thing you said is like, yes, do the work, guys, but like see what's working and see what's not working and then adjust.
The biggest mistake people make is they post for themselves and not for the audience.
Yeah, I would agree with that. And that's hard. That's hard to do because sometimes you're like, you forget about that. You're thinking, oh, well, like what can I post that will like make me look good? But like, it's like value for them.
Yeah, and I went through it too. Like as I was growing my page, like I used to be able to post like me and my lifestyle and me doing stuff and used to get a lot of engagement. But as my following grew for people strictly following me for tax advice,
they don't care.
They don't care about Carter.
I'm glad you said that because there's definitely we'll talk about with my team is like you can post like, let's say, it's not bad to post if you do this, but like some guys, like they just post lots of lifestyle, Lamborghinis, etc. And it's great, but it usually attracts, in my opinion, a younger demographic. Mm-hmm. Like it's a young guy who wants that, not an older, more established.
Not a 42-year-old that has $1 million business that's looking for a tax strategist,
he's like this guy's, and he's probably thinking this guy's a douchebag or something. Yeah.
So for me, it was hard. I was like, but like it lifestyle stuff too. But like they don't even care about me. Like I'll post a tax tip, it'll get 15,000 likes and 5,000 shares. I'll post me like at my desk, it'll get like 800. Like, and they don't care about me. Like, my page is no longer mine.
Yeah, and that's a good reminder. Because like even when I get frustrated, I think like that is like the thing that everyone needs to think about, because it's not about you, it's about them. And so if you can make it more about them and give them value, that should help.
Yeah.
Okay, I love that. So next, I want to move a little bit more into like personal life and like personal development. So are there any non-negotiables in your life that you feel have made you successful? And then are there any mentors you've like looked up to or you've learned from?
Anytime I want to do something, I found somebody who's doing it at the highest level, and I paid them whatever it costs for them to teach me how to do it.
Yeah.
I mean, and I know it sounds simple, bro, but like it doesn't get any more simple than that. If somebody has done it at the highest level and they've done it for themselves, don't you think that they can teach you how to do it for you?
Right.
And whatever they cost is going to be cheaper than the mistakes you're going to make on your way trying to do what they've done. And it's going to be cheaper to pay them than the mistakes, but you're also going to make more money faster by having somebody teach you how to do it in 6 months versus taking you 6 years to learn it. So when I want to learn how to build my brand, I paid my brother Nehemiah Davis. You know Neo? Yeah. Person I seen doing it at the highest level, I said, Neo, how much it costs?
I was for a second, I was thinking it's like your actual brother. I was like, no shit.
No. I know what you meant. That would be crazy. That would be crazy.
Yeah, Neo's really good on stage and speaking.
Yeah, so I was like, Neo, how much it costs? He's at 50,000. It was 50,000, but he's like, man, I'll give you a discount. It's like 35. So I was like, all right, 35,000. I locked in for 2 years.
That's crazy.
I said, okay.
Bro.
I said, all right, 2 years.
So that's kind of where you learned the 5-day challenge model from.
That's where I learned. Yeah, so that's why I learned that's why I learned the social media part from. That's how I learned how to build a brand. That's how I learned how to sell courses, digital products, webinars.
Interesting.
All that.
A lot of stuff, bro.
And then I was like, I want to be a better speaker and I want to be a better converter on my events.
He's one of the best speakers I know.
Yeah, so I paid
he
him.
Just knows how to bring it.
And then I paid Myron Golden, who is the best.
Myron's crazy.
Yeah. So I was like, all right, because like Neo, who did you learn from? Because I learned from Myron. I said, cool, I'm gonna still pay you, but I'm gonna pay who you learned from.
Too,
you right? And so I paid Myron $50,000 the first 2 years. The third year I paid him $200,000 for a one-on-one day of coaching and teaching and stuff like that. So like, I paid him $200,000. I made $2.2 million like a couple months later. That's crazy. So, and I just keep doing that.
Yeah.
Anytime I want to get good at something, I just find somebody who's doing that. I pay them whatever they cost. I do what they say, and then it works.
Yeah, no, and that's great advice for anyone listening. I would say I follow a similar path where I've invested, I want to say $3 million in mentors, and it's been over 6-7 years, but still, it's like that's a key thing you're gonna see, because if you don't know what to do and you have a mindset you're gonna win, you can't lose. That's the only way to do it, because like you don't know, and you're like, I don't know where to look, I don't know where to go. You got to find someone who knows that. So I love that advice. Is there maybe any habits or practices you found to be the most helpful? Like anything in your life that like you do on a consistent basis, where it's like, I go to the gym every day, I wake up at this time every day, I go to sleep, I do, like, I'm really religious, like whatever it is, like do you find any things that really kind of help you keep like a North Star in terms of success?
Yeah, I would say a few things. Number one, I believe that health is wealth, and if you can beat your own mind at the gym, like, so obviously I work out a lot, right? So my deepest fights are in the gym, right? Against myself. So if I can make myself do the extra set, do the extra rep, push myself to the limit in the gym every morning, the rest of the day kind of seems like a cakewalk for me, right? Like, so that my personal anchor is the gym every day, right? 6 days a week at least. So that's number one. Because if I could discipline myself to do that physically, I could discipline myself to do most things mentally, right? I agree. Number two is, I think people should focus on what not to do versus what to do.
I agree with that as well.
Right? It's not like, what do I need to do? Like, what do I need to stop doing?
Yeah.
Right? What do I need to stop doing? Because like, the more things you stop doing, the more day you get back.
Yeah. The less distractions you have.
Exactly. So cut out TV. Okay, I got 2 hours of my day back. Now I can use that 2 hours for something constructive, right? Stop going out during the week. Oh, I got 2 hours of time back. I used to go out. Now I got 4 hours in this bank. Now, whatever whatever you do with this time bank that you just got back, that's up to you. But like, all right, I decided to wake up a couple hours early and I got 2 more hours, right? Like Alex Hormozi had this saying that people say, man, I would do anything to get a shot at success, but you want to wake up an hour earlier, bro.
Yeah.
You know what I'm saying?
Yeah.
So I think it's like, what can you subtract from your life first?
Yeah.
Then we get all this time back. Then it's like, how do I allocate this time properly to be successful?
I agree with that. That's some of the stuff you said. It's just so simple, but it's just such great advice, because I would agree. Like when life gets simpler, when you make your life simpler, it's more about what you're not doing than what you are doing. Because, you know, if you want to be successful, like in my opinion, it's like you go to sleep at a good hour, you wake up early, you go to the gym, and then you work. You do, and that's it. And it's like, it's very simple, right? But we always try to overcomplicate it, or we try to say, oh, but that, like, we got to do this, we got to do that, and a lot of times you don't. So I really like that advice. Last question I have is there anything I should have asked you that I missed that maybe if I had asked you would have like helped the audience? Is there any question I should have asked you about either taxes or personal development, anything at all? And if there's nothing, that's okay. But I always like to ask that as like a final question.
That's a really good question. I might add that on my podcast. I don't think it's anything that you didn't ask me that will help the audience, but I do think there's something I can say to help the audience, and this is something I just live by. Is that you don't have to be great to get started, but you do have to get started to be great.
Yeah, I love that.
Right, and that's a word to Les Brown on that. If you just start, if you just start, you'll be closer than yesterday by not starting. So whatever you are trying to do, whether it's getting to building your brand or selling products online or building your consulting or coaching business, the faster you start, the faster you get results. And nobody has it figured out. Nobody has it all. I'm gonna wait till I get it all figured out to start. No, you start and then you figure it out as you start. And if you do that, because I found if I can get people to start, the rest kind of take care of itself. But people just don't start.
Yeah, love that. If people want to find you, or honestly save a lot of money on taxes, where can they find you?
Yeah. So Instagram is Cofield _advisor on most social media platforms. YouTube, we do have I have a joint YouTube with my business partner called the Melanin Money Show. Melanin, like the skin tone, so they can check that out. Those 2 places you can.
Awesome, dude. Thanks for coming on the pod. Appreciate you, and we'll have you on again soon.
Yes, sir.